Sweet. I think we can kind of let people continue to trickle in, but go ahead and kind of kick things off. Thanks everybody for joining. This is, I guess, what will be the first of monthly revisiting of the previous month's revenue and kind of general treasury goings on at Badger, covering July 2021. Our last presentation covered the first half of 2021. Our goal is to get these in a regular cadence, and they'll most likely be closer to the end of the closing month, and probably in the first week of September for the August one. This one we got a little bit delayed on. The presentation I posted in the channel. I'm going to try and monitor that, but I'm also looking at the presentation. So I have it on my phone, but if there's anything that, any questions that pop up that I don't see, I hope Will and Wes will be able to point those out, make sure those are surfaced. First off, obviously, the data and information presented here is for informational purposes. None of this is financial advice. There may be inaccuracies, misstatements. By viewing and looking at the report that we posted, you agree that the statements don't constitute a representation, warranty, or guarantee for any matter, and you're not relying on them for financial or investment advice. This is not advice. And we don't have a lot of forward-looking stuff in this. We're not going to be doing that on a monthly basis, at least to start. Things are still pretty lumpy, as we'll be kind of discussing here. But yeah, we'll move forward. So first thing is July 2021 by the numbers. We had about 713,000 revenue in July. The presentation, the data sourced here, I'll make sure that there's a link. It is our main Dune revenue queries. And you might notice that if you're paying attention on like the weekly basis, there might be slight difference between if you took the 4 weekly revenue amounts versus the total revenue booking over July. The numbers in this presentation should be more accurate. The weeklies are obviously prepared on a weekly basis, so we've had a bit more time to go through and ensure some of the numbers here are correct. We define total revenue as the value of the assets at time of booking. So there's also considerations to be made for volatility. Obviously some of the assets we intake can be incredibly volatile throughout the day. So where possible, we essentially take an average on an hourly basis, and then we average that across the day. That's the booking price. This is how a lot of traditional companies handle it, market makers, that type of thing. The total value locked at the end of the month of July was $485 million. This was up slightly from the previous month close, about 23%. So solid growth there. This was obviously during a time when the market has been or very volatile, I'd say. During the same time in that monthly period, Badger price was up roughly 25%, from in the $9 range to in the $11 range. Obviously, we're quite a bit higher now, so keep that in mind as you look at all of this stuff. The total assets in the Treasury at the end of the month of July was 124 million. This included native, non-native, so this included Badger tokens, DIG. It included Bitcoin that we've received as income, other assets we've received through helper vaults and set vaults as well. Our revenue lines, we have 4, right? We have the bridge, we have our sets, we have IBBTC, and then we have DIG, and DIG is kind of penciled in there. I might let Wes jump up in a sec to say something about this. We're still essentially trying to figure out how we really actualize and lock in returns and revenue there. Something we're, obviously need to put a bit more consideration to, especially with how DIG has been going in the last month. Very exciting stuff. I guess to highlight the bridge really quick, that's run in collaboration with the bridge team. There are new bridges to new chains coming pretty soon. Sets are obviously our yield earning products. And July was the start, or excuse me, at the very end of the month of June was the start of our convex ecosystem friendly sets. So the numbers here essentially represent sets that were transitioned over to that new strategy. If you're not familiar, that essentially means that we have a capped sell pressure that we create of any helper tokens or any tokens earned through that yield. This is part of a broader effort to make sure that, we're really focusing on sustainability and making sure that we're a team player within the ecosystem. And we really believe that it is going to contribute to a lot more positive outcomes. You know, the convex sets have let us acquire convex and convex curve, which are giving us voting power, and allow us to actually boost APYs on those. Pretty cool. And we've gotten a lot of positive feedback, it seems, both from the market as well as partners. IBBTC then is partner product with DeFi Dollar. It's a basket of Badger Bitcoin yield products. So it's a basket of our best performing sets. A lot during the month of July, there was a lot of discussion around fee changes, and that was actually implemented. And something you'll see in these numbers is that we don't actually include IBBTC for this most recent period. And it's because harvesting IBBTC is very periodic. Essentially, in about the last month and a half, the total IBBTC accrued to the contract is around 2 IBBTCs. So it probably stand to reason that the IBBTC income for the month of July was around 1 Bitcoin, or 1 IBBTC, excuse me. And then DIG, again, revitalizing, revamping. Wes, I don't know if you want to jump up and say anything about DIG, kind of what we've been thinking there. But we recently took a big position in DIG Liquidity, which is our attempt at essentially saying, you know, kind of here's where we see the cap downside of DIG, and really just trying to continue to provide resources, you know, community-led initiatives, that type of stuff, and really get DIG to be a core product and something that's able to drive revenue. Moving on to total revenue, following along on the slides. On slide 5, you can see essentially at the top, see bridge revenue, which is divided between mint and burn. We think about minting as top line revenue growth, essentially. If someone's minting Bitcoin, minting, you know, WBTC or RenBTC or one of our yield sets across the bridge, it's a further opportunity for the DAO to earn capital if they're depositing into our sets. Burn is the opposite side of that. So our mint revenue in July was about 40,000. And the burn revenue is around 2,000 or just under 3,000, excuse me. It's down about 13% month over month. Kind of to be expected just with market volatility. You know, we spent a lot of time at slightly depressed prices, and things really kind of more recently started picking up and becoming a little bit more bullish. You can also look at that from the fact that the product has only been live for 4 months, so we expect lumpy revenues to start out. So we expect kind of big shifts in total revenue growth over that time. The set revenue is the next component. Set revenue, essentially most of our set revenue is in withdrawal fees. Ends up being just above 90% usually. And in this case, the month of July was $613,000 in set revenue. That was down about 30% from the month of June. Attribute a lot of this to the fee discussion, fee changes. You know, we have a number of people that are bigger whales that are deposited in the product, and people that were paying attention to that conversation closely. So we didn't see a lot of movement between sets, which is something we saw, you know, a lot during some of the market hype in April and May, which were May being one of our strongest performing quarters. So numbers wise, essentially total set revenue was down just over 30%. Again, really do attribute that to the fee discussion, which is, you know, the core team kind of taking notice of what a lot of Badgers were saying in terms of alignment between users and the DAO, and making sure that really trying to have the products be for long-term users and make sure that we're supporting long-term users. And not just, you know, essentially trying to milk the withdrawal fee. And that's led into a broader discussion, you know, especially around IBBTC and that type of thing, which has gone pretty well. And I think there was positive market feedback to that. So I'd expect some of those revenues to kind of level out over the next couple months. If we look at total revenue, which is going to be slide 6 in the presentation, you can just see a breakdown of everything since December. Should be relatively clear. You know, total revenue growth as a percentage month over month was down about 40%. I look at that again as just market volatility led to a lot of that, you know, suppressed prices, right? Again, going back to the fact that we have revenue at booking, so we have prices at the time we've received the assets, not at their current value. And, if you look at this data, you're going to see just a lot of lumpiness, big growth in the first couple months, a lot of usage in the first quarter of 2021, a slightly slowdown in second quarter. And then July, a little bit lower than June. But if you're looking at the weeklies that are coming out now, you'll start to see kind of things rebounding a little bit, going up a couple percentage points. Move on to the next slide. If you're following along, we have metrics. So we have Badger price snapshots at the end of the month of July. The Badger price was $11.90. It feels like ages ago with where everything is right now. Not very long ago. The fully diluted earnings per share calculated off of that, $1.29. So that's essentially taking the revenues that have been earned over the previous number of quarters, extrapolating that out. Not always necessarily the best way to handle that because, we can't make certain predictions of future revenues based on past performance. But the document and the metrics that we use to arrive at that, we essentially found kind of a base case, conservative case, and a liberal case, and tried to kind of balance those to arrive at that. That brings us to a price earnings ratio of 9.2. And we have the last thing, kind of structured discussion that we wanted to chat about, was essentially what our burn and our expenses are. In the month of July, our total burn was around $565,000. Actually ended up being 50.2% in USD and about 49.8% in Badger. So that's taken at the time those assets were sent, taking the price. And typically the Badger portion of spend should be slightly less. In this case, we had the Hack Money and Gitcoin grants during this period. We have our open source ethos. We do a lot. We've actually found a lot of core contributors and long-term contributors through hackathons and bounties. So I look at that as a very positive way that we've spent money and not only contributed to the ecosystem through creation of tools. Some of our bounties are things that could be more generally usable, like a referral system and different things that will come to a head over the coming months. But also finding contributors that really care about Badger and then, also defining our onboarding and around that and how we bring new people onto the team. If you break down expenses by type, you essentially have that core contributors were about 60% of expenses. You got grants at about 14%, hackathons at about 14% as well, and then hosting, security, etc. Some of those other things around 8.5% of spend. So that kind of brings us to the end of the structured portion of the presentation. Had a couple things kind of earmarked for discussion. Obviously there's been a lot of going on with Dig. We've had some movements in terms of dog fooding our own products, which is just the idea that we use our own products with revenues that we've earned. So that's stuff that's in progress. But yeah, I guess at this point, I kind of want to let maybe Wes, if you want to mention Dig. I know there were some questions I saw earlier potentially. And then if there's any questions that people have and they want to throw in the chat, Treasury Talks discussion, we can kind of go into that.
Hey, thanks, Mason. Yeah, I think the big thing with Dig right now that has yet to be like decided, and it's partially because over the last few months, as Mason's been putting together the financials for Badger, so we can have these conversations and discuss in a more transparent way. During that time, Dig's been going through negative contraction, and so more recently, it's been going through positive expansion. And the first question that I think that we probably need to think about is how is that revenue? Is that expansion revenue considered kind of like from an accounting perspective new revenues, or is it considered more along the lines of like capital gains? And to be honest with you, I don't know the answer to that. I think elastic rebasing tokens are not common in the world of accounting, and it's not a common accounting question that's probably come up elsewhere. And so I think as we go into the next few weeks and months with Dig, that's probably something we need to look into more deeply and decide what's the right accounting treatment on that. Full transparency, I'm not a CPA. I've worked in corp financials the majority of my life, and so a lot of these questions, even in my own job, we rely on accounting to kind of consider, um, you know, things like how to capitalize, payroll accurately if it's working towards proprietary product information, and what's that life cycle. So there's a lot of things that, at the end of the day, we want to make sure we're going through the right accounting treatment. So I think with Dig, it's very exciting right now. I don't know if I have an answer in terms of what's the right accounting treatment for it, but I think it's something that in the coming weeks and months we need to think about and probably consult on to decide what is the right way to book that revenue, that's going through this expansionary phase right now.
Do you want to highlight at all or discuss kind of the TCL stuff? Because now a major portion of Dig assets, so a major portion of those native assets held by the DAO are in liquidity provider positions. You want to kind of mention some of our thinking behind that? And I know you discussed some of this stuff in Dojo, but just for anybody that might not be in those sessions.
Yeah, so the super short version of this is that BIP 66 passed a few weeks ago that allocated and denominated in terms of Dig. It allocated 20% of the Dig supply, which is roughly everything in the Treasury at the time, towards creating a Treasury controlled liquidity position for Dig. And so that was created. The first 10% of that was injected on August 4th through 3 different transactions, which Badger made public. In total, the idea behind it was that, obviously at the time that 20% position would have been about a $5 million total position with the commensurate BTC involved. The logic behind it was obviously trying to create a position that can scale and grow with BTC, given the fact that, the thinking here, the rationale is that Dig's going to be going through positive expansion, and so creating Treasury controlled position would be a prudent financial investment. It also was also addressing a need that the Dig market needed, given the fact that it had gone through 3 months of contraction. It was a very illiquid market, and so providing more liquidity also just helped from that perspective too. So that was the rationale or logic behind it. I think since that time, or on August 4th, the 3 transactions went through. And then after that, Dig, obviously, as most people know, has jumped pretty high above peg, and it became prohibitively expensive to continue making those injections. The BTC obviously became more prohibitively expensive. And so the remaining 10% has been paused. We're going through right now KPI options for Dig, so not to go into that, but the next step here is probably to create another BIP and discuss just the reallocation of the remaining 10%. I think, in my opinion, the more prudent measure is probably to allocate it back to Treasury, given the fact that the TCL, I think, has achieved its goal, and the remaining assets of the TCL that were not injected have seen a 20 to 30% increase. So I think that would be the more prudent. But again, I think the idea is, given the fact that this did pass through a BIP pretty strongly, we want to go back and go to the community and see if this is what they want to do, is if we want to go this route, or if we want to wait until Dig becomes closer in line with PEG to inject the remaining TCL. So that's kind of where we stand with the remaining 10% of the TCL that has yet to be injected. It's probably due for a pending BIP to allocate it either back to Treasury or to TCL at a later date. And that's just the rationale and logic behind it. And to date, the remaining 10% of the TCL that's yet to be injected, I think, has seen about a 20-30% increase. So,
and we can kind of get some discussion going back again in the RFF channel before we probably do a BIP. We really do value the feedback that people give. And we want to make those channels into places where everybody feels comfortable kind of sharing ideas, opinions, discussion, asking questions, that type of thing. We're trying to get better at responding to that type of stuff. So related to Dig, is there anything else you wanted to mention with?
No, I mean, I think the biggest question in context of this discussion today with Treasury Talks is just from a revenue perspective, or from a Dig is going through a positive expansion in the last few weeks. That's been very nice for both the Treasury that holds Dig, the TCL, and Dig holders. But I don't know what the right accounting treatment is for it. I think that is a question that we need to get answered. I think that's going to only be able to probably, like a CPA or a controller is going to be able to provide the best advice on that. And it's probably going to be something that changes and grows. I think, given the fact that DeFi as a whole is disruptor, elastic rebasing tokens are almost like a disruptor inside of a disruptor. There's a lot of new ground here that's yet to been discussed. And so I think how we consider it as part of the Treasury and how we book it as either revenue or investments is an important discussion that we want to lead the way on at Badger, and we also want to help other people kind of think about this and ensure that we're doing what makes the most sense from a compliance standpoint and just from a booking standpoint.
Cool, sweet. Yeah, I guess outside of Dig, something that comes to mind is also related to IBBTC. As I mentioned, we've changed, the fee structure was changed. We're looking at rebalancing that, which should be happening very soon. That will kind of essentially maximize the usage of our sets and optimize that. And then there's been discussion outside of Badger about use of IBBTC. There's the Llama community, Llama DAO, which is a treasury or finance DAO. They are trying to put together the Llama Diversified Index. They'd like IBBTC to be the entirety of the Bitcoin portion of that index product, which could be very cool. One of the main considerations they had was related to liquidity, which you might have seen last week, that our Curve factory pool with IBBTC is up. So there'll be more goings on related to gauge voting and some of that stuff. But overall, things are moving really well in the right direction. We're focused on increasing liquidity for IBBTC and increasing APY. And liquidity is really the big thing, and something that we need, the cosign of Curve on to make sure that we get the optimal reward weighting there. But really cool stuff there. Llama obviously wants that LDI to be a portion of, to be attractive for DAOs to Treasury, which I think would be a very, very good sign for adoption of IBBT. And other than that, I think we have Poe in the chat here, and maybe we'll message, but Poe's Badger Boost came out, which seems to have had very, very positive market sentiment reactions. I think we can probably attribute a decent amount of the price run to that. Essentially, very simply, what that is the more Badger you hold versus the amount of non-native Bitcoins, whatever, that you hold, the higher boost you get. Essentially creates a zero-sum rebalancing between the people that are most incentivized to be long-term Badgers. So it's exciting on that front. There are a number of different potential partnerships. I'm seeing in the chat, are there any insights from how Ampleforth handled accounting aspect? I think we'd have to, I'll look into that. My initial inkling, I haven't seen much on that. I think, I don't know how regulated Ampleforth attempt to be. Badger, we're obviously making strides to comply kind of with legal structures, both within the United States and other places. So I'd be interested to see one. I think, it'd be important to know how much Ampleforth cares about that type of stuff. What they're actually doing. Go ahead.
I don't know how Ample. I'm not, to be quite frank, I'm not that knowledgeable or involved with Ample. I think my take on it, though, is that from what I've seen and from the little part I have tried to learn about it and be a part of their Discord, is that their take is much more from like a kind of, they actually remind me a lot of my old peers and colleagues that I worked with, just from an economics perspective. They're all kind of like purist in that sense. And they see Ample as kind of like this purist kind of economics kind of theoretical experiment. So I think when you think about that in comparison with Badger DAO and Dig and kind of where Badger's going and Badger's mission in terms of trying to bring BTC to DeFi and trying to create a myriad of different products and generate revenue growth and have different flywheel effects with like Badger Boost and create this ecosystem that's sticky across all DeFi. I think that changes a little bit with Dig, because Dig's purpose is much more less so of like a yes in the sense that it's true to the same principles, but no in the sense that it's much more of a kind of revenue generating product, part of a much larger ecosystem, versus like a kind of experiment that's being run that's, you know, very much just like it is what it is, like it's going to be worth what the market demands, and staying true to that with like no outside kind of like Ample probably wouldn't run an out of protocol options layered on top to help align incentives to behavior, because their take is like it's priced what the market demands, right? So I don't know how much Ample's probably gone down this path, but I think it's something we should look at. Irregardless, I think it's some ways pretty exciting.
Sweet. Thank you, Wes, for great talk about Dig. I think I just saw 1500 Badger mentioned in one of the channels that the DAO's already up about 30% on that TCL injection. That is true. So that's interesting. And, you know, like, if you have any ideas or any thoughts about any of the stuff we've discussed, like, please do share them. You know, we're all learning here. None of us, you know, answers aren't set in stone at this point. Well, we can, you know, do things based on traditional methods and try to go from that angle. Like, all opinions are valuable. Really is the community that does things here and helps us think about what priorities are and stuff. So, but thank you everybody for coming. I know that we've got some pokes that are ready to go out. You're gonna hit up Tom Socks. That's TOMS0X. If you want to get one of those, they look pretty cool. They got some of Donald's art. But yeah.
Mason, real quick, and this might be my fault. Did we have 30 minutes or an hour? I think, is it just 30 minutes in?
I was just set. I was meant to be kind of unstructured. I figured it would probably be about 25 minutes of the main presentation and then open questions. So I'm happy to stay on if there's anybody that wants to just chat, questions, ideas. If anybody wants to raise their hand and come up.
Well, I did have.
Go ahead.
I wanted to ask. I actually wanted to ask the group. Sorry, the last Treasury talks we had, I was part of, and at the same time, I was trying to balance some things in my day job that are similar in this nature. My full attention right now is on this at the moment, and we have the time, we have the group here. I do think it would be good, you know, in some of the general finance talks, there was talk about like fully diluted versus, you know, like for earnings per share versus just like a non-diluted earnings per share, and how that can be looked at differently. Like if you're looking at like a more complex capital structure for organization, or trying to look more specifically at profitability, and then how that ties into PE ratios. Is there anybody on here that would want to, like, what Mason's put out to date is quite amazing, given the fact that it's kind of like a very small agile team that Mason is basically all Mason with Casudo, and a few others jumping in on. But are there other things, other metrics? I mean, again, the DAO, this group is the board, is the shareholders. You are the ones looking for more transparency, and while Badger's trying to meet everyone here, would be really interested in seeing if there's other metrics or other financials that would be of interest to share in the coming months and quarters.
And don't everybody jump up at once. But just know that we are interested in that stuff. We have tried to implement things as people have asked for them. So anything you put in that channel you'd like to see, like, let's get a discussion going. Let's chat. I mean, I recently updated the Dune Dash, so now we track essentially trailing 28-day revenue there, as well as trailing 7-day revenue, which should give you a pretty decent idea, kind of comparing those two, of whether revenues are picking up in the most recent weeks or whether they're dropping. But any little things like that, any kind of, you know, it could be a traditional metric, or it could be something brand new that you're imagining and maybe you don't even know how to define yet, but let's talk about it. Let's figure out if we can build it. Let's create new things and keep going. Sweet. I guess we'll keep a good eye on I'll keep a good eye on the Treasury Talks discussion channel for the rest of the day. If you want to put stuff in general finance, that's probably going to be the best channel for that moving forward. But thank you all so much for attending today. And we'll just keep building and keep going. Will, is there anything else that you wanted to say, mention, discuss? Is the dropping revenue a concern? We got Tom. Tom asked if the dropping revenue is a concern. I guess it would be in the case that, we're in DeFi, we're in crypto, like things get really hyped up right around launch. So we had really, really strong revenues right out of the gate. But I wouldn't really necessarily look at those first couple months as being indicative of future revenues. I think that if we're looking at the last, say 2 months of things, if you took kind of an average or an aggregate of those amounts, would probably be the most. Don't take the first months. Yeah, I think those would probably be the most indicative. I think we'll need to continue watching. We've had things have picked up in the last couple weeks from previous month. So that's been pretty positive sign. But it's just something we have to keep monitoring. And, if we do see things changing, we might evaluate whether that means we need to make changes to our fee structure, whether that means we need to focus our attention in different places on different products and all that stuff. I think a lot of maybe the more recent declines could be kind of attributable to some of those changes and discussions we had with the community around fees. So yeah, definitely something to keep monitoring actively.
I was going to say too, if you look at the majority of the revenue is the revenue. So I would almost look at inflows versus outflows as a better indicator, and which is what Mason said. Like our revenue, similar to like a services organization, is generated off of a backlog. So we have people come in and they put money into a set, and then the performance revenue and withdrawal revenue is generated when they exit that set. So the revenue is really a trailing indicator. It's if you have revenue spikes, it means people are actually leaving versus anything, which is good because you want to capture that. But the majority of revenue, as Mason mentioned, was in April, May, probably as when the APY is really high, Badger was really going through a lot of growth. And then afterwards, people, capitalized on that and they left. And obviously it's been a bit more volatile, but in some ways, increasing revenue is almost an indicator for probably people leaving at the moment, just because the majority of it's generated from fees that are incurred when people exit or withdraw, or performance fees. I think the mint revenue from like bridge and stuff like that, the inflows to different things, minting, that's as that grows, that'll be a better indicator of growth. So I guess Tom's OX, I don't see the revenue falling as a concern. I actually see it as a positive in the sense that means more people are locking up. And if you look at the total value locked for Badger over the last couple of months, it's growing. So more people are locking up, fewer people are withdrawing, and that's probably I know nobody asked it, but if normally, I think typically I would probably expect questions around like, well, how do you envision, growth to continue and product to continue to innovate? And I think this is probably a lot of a testament to the innovation across the different products that have come up, coupled with the Badger Boost, which is creating a really nice flywheel for Badger, where people are locking up their revenue, it's growing, are locking up their value in vaults, and it's growing. But as a side effect, they're not exiting, which is probably going to have I would actually expect revenue to fall, which is a good thing because more total value is going into vaults until mint revenue becomes more of a larger share of the revenue take for Badger.
And further on that, kind of to further on your question, Tom, I think as we see less people exiting and more people wanting to be long-term in stuff like the sets, that's really where the importance of something like IBBTC comes in. And then further things off that, if you think about our whole ecosystem, you got bridge in, you can go straight into a yield set, and then you can go and use that. You can mint IBBTC, go use that as collateral, so you can have interest-bearing collateral. So I think, there's a dual focus that needs to happen I think from the perspective of kind of making, current users more profitable, I think that's kind of almost the opposite of what we've done in terms of like individual product usage, right? Because, we're trying to be more considerate about fees, make sure that someone's not depositing and kind of aping in and, losing a percentage or whatever, either way. So it really needs to be about kind of just continuing to figure out, okay, how do those assets continue to be used in the ecosystem? Mabel asked about revenue share. It's a subject I personally shy away from as a U.S. citizen. It's really tough. Revenue shares kind of just puts us solidly in the bucket of being a security. It's not something I think we should do. So, we need to figure out what other ways can we kind of try to create. Yeah, it's Mabel says it's the first time hearing it. So, I mean, I think if we do revenue share, it pretty solidly, like the Howey test would define us as a security. It's, I guess, if the community, if that's something that if they really want, it's our job technically to execute upon that. But that really would have to kind of come from that angle. Yeah, it's been mentioned and discussed, and sometimes our appetite is a little bit larger. Our eyes are, I guess, bigger than our appetite. I wouldn't necessarily consider it a delay. I think the boost mechanics that we've been introducing are kind of an attempt at really creating more utility for Badger. And one of the further ideas with the boost is being able to essentially rent out your boost to whales. So that could provide some further utility and potential like revenue for people based on their own choice. But like if we're too prescriptive, as kind of the core or whatever, it might turn into more problems for Badger than it provides, revenues or whatever for Badger holders. So it's a fine line to walk there, right? Trying to be as compliant as possible, but also be considerate of Badger holders. Yeah, and definitely like let's continue this. And he said Mabel says that first time hearing it, not once mentioned in chat. Let's continue the discussion in the general finance stuff. Share what you know, share what you're thinking. What do you want out of Badger? What things are there? I don't think Mabel handling it pretty good. Like your profile pictures may be confrontational, but no, I like it. But yeah, no, literally, this is all stuff that we do want to discuss. So this is exactly kind of why we want to have these monthly discussions, not just to discuss the revenues and stuff like that. Like kind of think about some of those further things, round out the ecosystem. Sure, all the.
I think a lot of this
continues to be. Go ahead.
No, I think a lot of this too is changing. I think Mabel, you're right. Like there's been a lot of things that's been talked about, and if you look back 2, 3, 4, 5, 6 months ago, there's other things that have been discussed, and it's not that to say that like they're not going to happen now or they change. I just think that the climate for DeFi, as most of you probably all imagine and can see, has been very changed. Like it's an unknown still, right? But it's also changing really quickly too. I mean, and the last 4 or 5 months, what was then maybe a different concern or something that came up is now probably entirely different. Now it's just a very volatile environment, and I think there's so many ways for Badger to execute on its mission. And I think sometimes those things are just focusing on the things that are more like if you have 10 things you can do and they're all equally good ideas, but 4 of them raise alarm bells with the SEC, then it's probably best just to avoid those 4 and do the other 6, right? You've only got capacity to do 4 of them anyways. So let's over index on the things that we know aren't going to raise the alarm bells and then come back on the other 4 that might. It's not to say that revenue share is like not a good idea or will never happen, or it's just is it the best way to maximize our on Badger's vision at the moment, when there's other things that we can do and other ways to prioritize that maybe aren't as potentially controversial in the eyes of like regulatory and compliance. I don't know if that's a good answer for you, Mabel, but just the way I kind of consider this.
Will, is there anything you kind of want to say to wrap up? I see there's a couple more questions coming in, so I can continue to answer those.
Yeah, you keep rolling. All good on my end. Just the POAP stuff, which you mentioned a bunch, but yeah, feel free.
Yeah, make sure you guys get your POAP if you're here, and otherwise, yeah, I guess that'll conclude. I'll stay on for a little while here, and if you want to just jump and chat, feel free. And I'll continue trying to kind of answer questions.
Mabel, you're asking, you didn't know much of our Americans. I'm actually, I'm not American. I just changed the voice on these calls, so I just want to throw more people off. Nobody knows where I am, who I am, what I am.
Yeah, hit him up if you need the licensed voice changing software. He's got really. Yeah, I mean,
I think it's good. It's a good question though, and I think it's. I think at the same time, I look at things like Uniswap, and I'm like, oh, I'm not really a fan of some of the things they've taken or the approach. But at the same time, it's kind of like what makes the most sense in the moment and where to spend time. And to me personally, things that potentially could raise regulatory concerns or bring in parties that might have questions, like just why not avoid those for the moment? Doesn't change anything other than just focus on the things that you know won't be a concern.
John, that's great. PSYOPs 1000. Yeah, Wes has great voice changing software. But yeah, no, I mean, it is, you know, we're navigating a lot of different stuff. We're navigating the intersection of finance and how a community really manages that. So continued discussion is really what's going to be important here. And it is walking and balancing the line of having, you know, a core be able to make decisions that we believe are in the community, making sure the community has say. There's concerns related to it and different, and it's something we're learning. We hope to continue to be better at, or instrumental in that. So thank you again, really, for even just attending this and being willing to ask questions, share your opinion, see more use cases for Badger products and sharing revenues with the protocol, shares revenues. So we do that with Yearn, right? We bring TVL. I think technically the revenue share there works, so they share revenues. It's obviously something we're kind of examining, you know, just in terms of, and I don't want to say critical. Yearn's a great partner. And we have other partners too that we have agreements with, you know, the bridge is done with the partner, IBBTC is done. And that's something we've really found is making sure that we are working on what we do best and finding other on what they do best, and then one another. See, Mabel said, cruising through decision making, strong leadership.
You're cutting out a bit, Mason.
Oh, sorry.
That's okay. Just a little choppy on your end.
Sorry about that. Yeah, you know, I think like that's kind of most of what I discover. Yeah, typical too many cooks. Yeah, it's a balance. You know, it's, I think like really being able to transition ownership to the comes down to improving access to information. That's everything. Is just making sure that decisions can be more granular, that people that might not necessarily have an understanding of a certain issue can at least understand who's telling them about it, you know, kind of trust. I mean, it's like delegation or federation. It's all part of like a democracy, I guess, in a certain sense. But it's definitely a balance, and definitely been informative, I think, for all of us on the team. But really, at the end of the day, we do want to improve user experience. We want to make sure that we're providing A+ products, and that's really what's going to make sure that like any regulatory stuff doesn't hit us hard. Is like, and I think we're doing a good job of is just really showing that we do. At the end of the day, you know, we put users first. And I think that's kind of where I'll let it wrap. And I'll continue with the monitoring the chat and stuff and trying to be active in there. And then by the end of the day, we'll try and move over to the general finance channel. We can continue all these conversations, and let's get stuff active there. And you know, don't hesitate to reach out if you have questions. You can DM me personally. And yeah, thanks all.